Okay, good evening, everyone. It is 6:30, so we are going to get started. We are expecting approximately 20 registrants to join us for tonight's program. It will be recorded, and we will have some handouts, which I will be sharing after tonight's program, and I will be sending out to all attendees. If you can allow me just a moment to introduce myself, I just sent a chat to everyone. My name is Patricia Smolin. I am the Business Reference Librarian at the Schaumburg Township District Library. And a lot of the work that I do centers on programs for those in job and career transition, those that are looking to start or grow a business, and also patrons interested in financial literacy, of which the latter fits the bill 100% this evening. So tonight's program, Investing in the Digital Age, Products, Consideration, and Preventing Fraud, will also address cryptocurrency, which is what we had intended to do when we reached out to the SEC and asked for their assistance in presenting for tonight's program. So we are going to hear from investor assistance specialists from the SEC Division of Enforcement to give an overview of digital assets, including cryptocurrency, investing apps, and tips to avoid frauds and scams. This presentation is not designed to assist with how to invest or profiting from investments, but rather how to recognize the red flags of fraud and provide tools so you can make informed investment decisions. I'm going to introduce our speakers in just a moment. I do want to mention that the library is starting its second floor renovation. It just started within the last couple of weeks. So while we do have many books on this topic, and we also have many electronic sources we can introduce you to, when you come to the library, we may be a little have a little bit of dust about, but we are open. Please do come visit us in the second floor. If there's an item you're looking for and you can't find it, librarians and the reference desk staff are here to assist. We are going to be going through this renovation until mid next spring. I don't have an exact wrap-up date. And we'll be posting updates on our website so you can see what's happening in progress with the construction and what the end result is that we're aiming for. So if you have any questions about this topic, you're welcome to reach me. I put my email in the chat, or you're welcome to contact the ref desk at the library, and we will try to give you the most complete answer possible. But please don't be dissuaded from coming to visit us just because of the renovation. We are still here for you. I would like to turn this over to Pauline Zelkin and Anne McKinley, who are here for tonight's program. Ladies, I want to thank you very much on behalf of the library.
Thank you. I'm Pauline Zelkin, and thank you so much, Patty, for having us, and for all of you who have dialed in for this. We really appreciate it. It's a very important topic. So my name is Pauline Zelkin. I work at the Chicago Regional Office. I've been at the SEC for almost 21 years. I started off in Boston and then transferred to this office. And you know, for the majority of those years, my job has been as an investor assistance specialist in enforcement to actually handle and investigate all tips and complaints that come through the office. And much of that does come from the public. So what we're trying to do when we get out there is to prevent the number of tips and complaints that are coming from the public, because we're hoping that, you know, by educating everyone to just, you know, have the resources that some of this can be avoided. But we're going to talk a lot about that and provide you some of those resources also later in the presentation. My colleague, Anne McKinley, is going to start us off, so I will now turn it over to Anne.
Thanks, Pauline, and thanks, Patty. My name is Anne McKinley. I'm an assistant director in enforcement at the SEC in the Chicago Regional Office, like Pauline. My day job involves investigating and supervising the investigation and litigation of lots of different types of violations of the federal securities laws, including fraud. Outreach is near and dear to my heart, and with Pauline, we try to do a lot of sessions to educate the public on how to keep themselves safe. So hopefully their names never run across my desk. So with that, we do need to give a quick disclaimer. All of the information that we will be providing to you today is being provided as a service to investors. And we're not going to be providing any legal advice or investment advice today. Instead, we're just going to be talking about general principles of sound investing and how to protect yourselves and avoid fraud. While we are speaking in our official capacities on behalf of the SEC, the views that we're expressing don't necessarily represent the views of anyone else on the commission staff or the commission itself. Okay, with that out of the way, just want to briefly go over what we're going to cover today. So we're going to talk about some investment products, including investment products beyond stocks and bonds, ways to be an informed investor, how to keep bad guys from stealing your money, and then some resources that you can use to further educate yourself after we're done. Next slide, please. So investing can seem like a very complicated topic. It can be confusing with the array of options available, especially today with all sorts of digital investments also available to you. We're going to go over like some of the newer products and investing platforms that have become much more prevalent in recent years, but also let's just start with a quick overview of kind of traditional investments. Next slide. So whenever you start investing, whether it's at the beginning of your career or later in life, one of the things that you need to think about is what factors are going to guide you in making decisions about particular investments. So I've got a quick poll question. If everyone could put in the chat what factors they think may guide their decisions on what to invest in. So hopefully no one is answering A, whatever provides the quickest and easiest way to get rich. Instead, focusing on B and C, how much time you'll have until you need your money and how much risk that you're willing to take on. Right, next slide, please. So rule number one of investing is that all investments have risk. Anything that you invest in, there is some risk involved in it. But if you're a long-term investor in the US markets, historically, you've done quite well. And there are ways that you can manage the risks in making a diverse investment portfolio. Okay, next slide, please. So the biggest difference between saving and investing is the risk that is involved. If you look at the chart on the screen, cash is at the lowest part, it's the lowest risk, but it also provides the lowest return on investment. You don't get anything with cash. And then as you want to get greater returns, you'll kind of go up the arc and take on more risk. You look at bonds, bonds are a little more risky than cash, but the returns are a little more than cash. So there is a return involved. And then if you go up to stocks, stocks have more risk than bonds or cash, but also the potential for higher returns. Next slide. So here's a different chart, just looking at the risks and possible returns with a bit more specificity. So if you look at the cash equivalents, they're lowest risk, but lowest returns. Bonds, and for anyone who isn't familiar with corporate or government or municipal bonds, it's basically an IOU. You pay money to the company or government entity, and they'll pay you back your principal with interest. And they're moderate risk, but also a moderate return. And then stocks generally pay the highest returns. Historically, it's been about 7 to 9% on average, but they do carry a higher risk. So let's talk a little bit more about some of the specific investment types. So stocks can fall into a few different types of categories. They're growth stocks, where their earnings grow at a faster rate than the market average. They rarely pay dividends. So it'd be something along the lines of like a startup company. Then there are income stocks. Those are the companies that will pay dividends consistently and be something like an established utility company. There are value stocks. Usually, those are companies that have maybe fallen out of favor with investors for some reason. So they have a low price to earnings ratio, which may end up netting you more in the long run. And then they're blue chip stocks. And those are shares in large, well-known companies with a solid history of growth, and they'll generally pay dividends. Another way to categorize stocks is by the size of the company. You look at the size of the company by its market capitalization, and it's the number of shares outstanding multiplied by the stock price. Some companies are considered large cap, where they may be worth tens of billions of dollars. Company would be considered small cap, with maybe hundreds of millions or less. And then mid cap would fall somewhere in between the two. Next slide. So we're just going to move on really quickly through kind of the general, more established investment types. So next, let's talk about mutual funds. So mutual funds are a way to invest in the market without having to pick individual securities. A lot of workplace retirement plans, like 401k plans, offer a selection of mutual fund investments to employees. The main benefits of a mutual fund is you'll have a professional money manager doing all the research for you, selecting the securities, and then monitoring their performance. They provide instant diversification. So they'll invest in a range of companies and industries. Some will focus in a particular sector or area, but generally they provide a lot more diversity than just a single company would be if you bought that company's stock. So that will help lower your risk if one of the companies in the mutual fund happens to fail. Mutual funds are usually affordable. They set a relatively low dollar amount for an initial investment, and then for your subsequent purchases. And then they're liquid. Mutual fund investors can easily redeem their shares pretty much any time for the current net asset value of the fund, minus any redemption fees. Now, mutual funds generally fall into kind of a few small categories: money market funds, bond funds, stock funds, and target date funds. And each one has different features, different risks, and different rewards. The SEC has a publication that is a good guide for anyone who is interested in mutual funds or exchange traded funds. It's available on our public investor-focused website, investor.gov. Okay. Then let's move on to exchange traded funds. Exchange traded funds, or ETFs, are similar to mutual funds, but mutual funds are traded they're priced at the end of the day. They're traded on a normal exchange, but you can't get in and out, at noon. Instead, the price that you're going to get is the end of day price. ETFs, on the other hand, trade on a national exchange throughout the day. So their price will be changing constantly throughout the day, and that's what you would get when you buy into it. There are a few other smaller differences between them. The operating costs for an ETF tend to be less than that of a mutual fund because they generally just invest in an entire sector. And so they don't have the active fund management putting in individual companies' securities and then pulling them out, and the constant trading. ETFs disclose to the public their holdings every day. Mutual funds disclose it on a quarterly basis. And then because you are buying in at an exact price rather than kind of an average price at the end of the day, there may be some tax savings with exchange traded funds. Okay. Another security that we get asked about quite a bit is penny stocks. Penny stocks are stocks that are valued even below small cap stocks. They're sometimes called micro cap stocks. They're often companies that have little or no earnings. they can be very risky, and they are subject to promotion by fraudsters who may be able to get a large number of shares for very cheap, and then they'll dump them on the market, and unsuspecting investors will buy them to cash out the fraudsters. If you're considering investing in penny stocks, tread very carefully. We have investor bulletins on investor.gov that talk specifically about microcap stocks and what to do to protect yourself, to make sure that you aren't one of the people that unknowingly ends up buying out a fraudster. One other caution with penny stocks is if you see a Q at the end of a stock symbol, that means that the company has filed for bankruptcy. So tread very, very carefully. Another question that we tend to get quite a bit is about how to invest in fractional shares. So fractional shares are newer. It's a way for investors to buy a portion of a stock or an ETF. Instead of investing through a mutual fund where you're getting a portion of each one, this gives you a fraction of a share. And so you can place an order to buy fractional shares in either dollar amounts or partial share amounts. So if a stock trades at $1,000 a share, you could say, well, I just want half a share, or I want to spend $500 and get that amount in shares. Not all firms offer fractional shares. There may be limits to which securities you can actually buy in this format. Then there also may be additional fees imposed upon you for buying in a fraction instead of a whole number. Always ask about the fees and the costs and any commissions prior to investing. There also may be some difficulty in selling fractional shares. Not all firms will guarantee the liquidity of fractional shares, even if full shares of the stock are completely liquid. They may wait and group you with other people to get up to a full share. So these are just questions that you should ask before diving in and investing your money in fractional shares. Okay, so the topic I think everybody was most interested in, and that we've been trying to talk about quite a bit, is technology and investing. And so technology has made investing really easy, but it's also exposed everyone to massive amounts of information and advice from all corners on how to invest. So when you're investing, you have to be careful where you get your information. Celebrities get paid quite a lot of money to endorse all sorts of different types of products, including securities. It means they're going to profit no matter how well the investment performs, but you don't get that benefit. In addition, social media has raised kind of the involvement of the internet in investing advice. And the internet's full of bad investing advice. But even when the investing advice is okay, it may not be okay for you because it won't meet your specific investing goals, your specific time horizon, or your specific risk tolerance. Do your own research. Seek out unbiased sources. Your local library may have free resources that can improve your financial capability. Talk to Patty about that. But more importantly, figure out in advance what your particular investing goals are, what time horizon you'd like to invest for, and what your risk tolerance is before you start. Investing is a long game. It's not a get-rich-quick scheme. So a good starting point for many people would be a low-fee, diversified, and tax-advantaged investment like your workplace 401k or an individual retirement account. And then once you have that, then build from there and decide how much money you have that you're still willing to invest in other ways. Next slide. Thank you. So You can invest outside of the traditional investments that we just talked about. But keep in mind that alternative investments typically come with a lot less transparency, a lot less government oversight, and a lot more risk. Some investments, like hedge funds and private equity, are limited to high net worth investors. Some other investments, may have complicated schemes involved with them and very high fees. The most important thing for you to do before you agree to invest in any type of alternative investment is to do your research. Investor.gov is a free resource. It's focused on the investor point of view. So it gives you information that will help you learn about each of these different types of products and then make your own determinations on how much to invest, how risky you're willing to make your investments, et cetera. So crypto assets are hugely in the news. I'm sure you've all been hearing quite a bit about digital investments, the terms tokens, non-fungible tokens, crypto assets, cryptocurrency. All of those terms are thrown around daily anymore. And all of these crypto assets exist in a virtual world. They're created and stored in digital form. They use a special technology that's like its own distributed ledger called blockchain technology. It's basically a complicated coding system that tracks transactions and ownership. So one of the biggest selling points for crypto assets is that they are not regulated by any central government. Now, next slide, please. One of the biggest risks with crypto assets is they are not regulated by any government entity. So if you're going to invest in crypto assets, you need to do your homework and consider the risks. Crypto investments are relatively new and relatively untested. Even Bitcoin is only a little more than 10 years old. So novel investments with limited track records do tend to have additional risk. Crypto assets are also speculative. So the buyers are hoping that someone will pay more for the assets than they did. But they have to recognize that there's a significant chance you could lose your money in them as well. So it makes them different than a share of stock in a company like Amazon that, you all see the trucks going around delivering boxes to everyone. They have a very well-known revenue stream. They have customers, they have warehouses, they have software, they have all sorts of things that have intrinsic value, not merely a speculative value. One of the other issues with digital investments, as I mentioned, is that they are largely unregulated. Now, that regulatory posture could change in the future. It seems to be changing day by day, but they still don't have the same level of investor protection right now as you would expect in other more standard investments like stocks and bonds and mutual funds and ETFs. So you need to recognize that their unregulation presents additional increased risk. An additional risk with crypto assets is that they are highly volatile. So meaning the value can change significantly over short periods of time. So if you look at the example on the slide, this is Bitcoin over the last, from about July of 2021 through about June of 2022. And if you look at kind of the way the graph goes, it's a roller coaster ride. It went up well above 60,000 and then fell down close to 20,000. So that's just 1 year of $40,000 price swing. If you buy at the top of one of the swells or even kind of mid swell, you could lose a lot of money when the price falls. So the moral of the story is all investments have risk, but investments that are new, volatile, speculative, and largely unregulated have additional risk, and you can lose some or all of your money. If you think of investing as a series of building blocks, you can think of it as you want to have a strong base, and then maybe you can take on more risk as you go higher and higher and higher. If you give careful consideration to how you build your investment portfolio, then that will allow you to determine how much money you're willing to invest in more risky and speculative investments compared to how much you're willing to invest in more stable and comfortable investments. So do the right thing and make sure that you have an emergency fund set up before you invest in something speculative. Take advantage of any tax advantaged investing like a workplace retirement fund. And then if you have money to invest after that, consider some long-term, low-cost, diversified investments like mutual funds, index funds, or ETFs. And then if you have some other money left over, then maybe consider that as the type of money that you were willing to lose, that you could invest in something more risky. Next slide, please. So there are a few other things I just want you to keep in mind about crypto assets. They are very vulnerable to misinformation, rumors, or fraud. That can really impact their pricing in the market because the pricing isn't being determined by assets, trucks, things like Amazon has. And I'm not trying to use Amazon as a particular example, but I think it's familiar to everyone. But you know, those types of things aren't involved. Instead, anything can cause their price to fluctuate up and down. There isn't much transparency into crypto assets, operations, their financials, or how they're governed. Crypto assets have become popular with bad actors and fraudsters, including terrorists, to launder money or conduct illicit activity on the dark web for that very reason. There's also a possibility that because they're digital, there could be cyber hacks or systems failures as well. So it's a good thing to ask some questions about how protected your investment would be. There is a risk that vendors, banks, or institutions won't accept digital currencies or crypto assets for payment at some point in time. It's also possible that they may not accept certain crypto assets for payment. Another interesting point about crypto assets is that mining coins actually requires a huge amount of energy. There was a study by Harvard that showed that Bitcoin consumes an annual energy draw that is equivalent to the entire draw of a country the size of Sweden. So on the screen, we have an advertisement for a digital investment called Howie Coins. And this is an example that the SEC put together, showing you the types of information that fraudsters may use to entice you to purchase things. There are definitely legitimate digital investments, but some heavily promoted initial coin offerings and crypto assets that we have seen marketed to investors are complete scams. Now, it may be that the participants are not complying with applicable regulations. There's little transparency with it, but some of the sales and marketing tactics that are used to lure investors in this space include promises of very high investment returns with little or no risk. That's a classic warning sign of fraud. Fraudsters may post, fabricated historical returns on their website and show that, they've gained 10%, 20%, something huge. They may promise those types of returns. Unlicensed and unregistered sellers commit a lot of securities fraud targeting retail investors in the United States. So if the person can't show you that they are licensed and registered to sell securities, walk away. A lot of times fraudsters will post, investment accounts or fake investors saying that their accounts, gained 30% in just 1 year. They doubled their money in just 1 year. But a lot of that is fake. It's a tactic that fraudsters use to entice investors with the prospect of great wealth. If an investment sounds too good to be true, it probably is. Usually, the potential for a very high investment return also includes very, very high risk. Also, as I mentioned earlier, fraudsters sometimes pay people, including celebrities, to pose as either people that have made a lot of money or ordinary people that suddenly turned into millionaires. So if someone's touting an investment on social media, look into how they're actually getting paid and whether they truly are an investor. Next slide. So in September of 2021, the SEC brought an enforcement action against a company called BitConnect, alleging that it was one of the largest Bitcoin-related Ponzi schemes. According to the SEC's complaint, the defendants collected about 325,000 Bitcoin, which was worth about $2 billion at that time, from retail investors. It was throughout the world. They had a platform that encouraged investors to lend their Bitcoin to BitConnect. And the founder of the platform allegedly told investors that they would get huge returns from a proprietary Bitcoin trading bot. But then he secretly paid a network of promoters around the world to promote the lending platform through kind of testimonial style YouTube videos and other social media. The SEC's complaint alleged that the investors were rewarded if they recruited new victims through a pyramid scheme like referral program. The website for BitConnect promised that investing on the BitConnect platform was a safe way to earn a high rate of return on your investment without having to undergo a significant amount of risk. Platform allegedly paid investor withdrawals out of incoming investor funds and never traded the investors' Bitcoin. So eventually, the platform collapsed and investors lost massive amounts of money. So what can you do to protect yourself if you want to invest in this area? If you're considering an investment in any type of crypto asset, make sure that you ask questions and then make sure that you are willing to walk away if you don't like the answers that you receive. So what questions should you ask? Where's my money going and what's it going to be used for? And will it be used to cash out other people, or is it actually going to be invested? You also should ask who is issuing the security and sponsoring the product. What are their backgrounds? Have they ever done this before? Are they licensed security professionals? Do they have a written business plan that you can actually understand? Other questions that you may want to ask are how, when, and how much will it cost me to sell my investment? Do you have a right to take back whatever it is that you gave to the company or get a refund if you change your mind? Is the security offering registered as a security? Does it comply with the securities laws? In addition, you should ask if there are any legal protections in case of fraud by one of the company's officers or employees, hacking, malware, or just an outright downturn in the business prospects or the availability of the investment. And who's going to be responsible for helping you or refunding your investment if something goes wrong? Okay. I
just want to interject there a minute for a second. These questions can apply to literally any type of investment. Crypto, I mean, the thing is, as Ann mentioned earlier, in cryptocurrencies and digital assets, some of these may not even be able to be applied in some areas because it's not regulated in some areas. So you got to keep that in mind. But, these are really good questions just to ask. And even if the answer is, what it is, but every investment, securities, digital, they should be able to answer these questions so these are really just good ones just to always have sort of in your pocket.
That's a great point, Pauline. Okay, so quick question. If you feel like answering, please answer in the chat. Do you use an investing app? While we're waiting for anyone who's interested to answer, let's move on to the next slide. So if you use—
And if you don't, you might learn a little bit about them right now. So
exactly. So if you use an investment app, or if you're considering using an investment app, here's some advice on how to make sure that you're protected. Make sure that any investing app you choose is licensed to do what they say they're going to do. So they're a licensed broker-dealer or investment advisor. You can actually check that on investor.gov. And there's just a box for licensed professional, and you can put in a name and it will let you know what their history is and whether or not they're registered. Many of the investing apps advertise that they are no fee or low fee apps, but check the fine print. Make sure that you're comfortable with how the firm is being compensated. They are not doing this for free. They are being compensated somehow, but sometimes the compensation will be hidden in fine print or in or amongst other fees. Some firms may be very difficult to reach if you have questions. Some of them have no customer phone service and instead only offer email assistance, but it may take them some time to respond, days, and maybe you can't wait days if you have an immediate question. Some of the apps also give inexperienced users access to very complex or high-risk investment products or strategies like options trading, where you can actually lose more money than you initially invested. Some of the apps also use entertaining user interfaces, which will give you, happy and sad faces every time the stocks go up or down, or video confetti every time you make a transaction. And it can encourage investors subconsciously to trade more often than they would really want to, because it looks like a video game or online gambling. So be cautious about that. Something that also happens with investing apps and otherwise is investors trying to time the market to pick winning stocks in order to make a lot of money quick. So there's a Library of Congress study of investing behavior, and it showed that active trading, timing the market, generally actually results in underperforming the market for a few reasons. Investors tend to hold on to losing investments too long and sell winners too soon. We also have a tendency to follow trends and overreact to good and bad news in the market. Also, you may be charged a fee each time you buy and sell, which adds up over the long term to a lot more money than if you had just bought and held. Picking only a few stocks, hoping that one will be a winner, could also leave your portfolio with very little diversification in case there's a downturn. The studies have shown that even missing just a handful of the best days in the market can severely impact your long-term investment returns. Instead, having a low fee, diversified, long-term buy and hold strategy can better assure you of capturing all of the market's best days, in addition to the not so great days in any time period.
Hey, Anne, can I interject just for a second? We're getting a little short on time, so I'm wondering if maybe we could, I mean, we have all the next slides available to everyone, but I'm wondering if, you know, we could maybe go to the tips for smarter investing, a couple slides down, and then hit the
That
fraud
sounds
section.
good. Yeah, I think
I
that's
apologize. I don't want to skip through too many of these. There's a lot of good stuff here, but we're going to provide it to the registrant. So I want to get to the fraud section for sure. We've already talked a lot about it, so that would be sort of a recap, but we want to make sure we're ending on that type of. So I'm going to go ahead. Let's see. So let me get. You know, we talk about mutual funds and ETFs and capital gains. We're not tax people, but capital gains are definitely something to always consider. Okay, and then we'll just do the investing considerations. Is that all right?
That sounds great.
Fraud.
When we move to the next slide, and here I just have some advice for you on how to invest wisely for the long term. Know your time horizon and keep your long-term financial objectives in mind. Remember that any information that you read online about specific investments often will reflect a short-term trend as opposed to the long-term potential of the particular investment. Don't let your emotions get in the way of your long-term financial goals. We're human. So of course, any information impacts us, but don't make emotionally driven or impulsive investment decisions. Instead, create and stick with a financial plan. And then if you do consider a short-term investment, think about how much of your portfolio you're willing to actually allocate to it, and maybe only allocate a small portion of it. Use caution when investing based on social media. Take the time to do your own independent research and never let anyone pressure you to invest right away. No investment should have a ticking clock on it on how to get in. If you want to use the investor.gov or the SEC's Edgar database, which is on our public website, www.sec.gov. You can do research on individual public companies and read about them. Risk, as we talked about earlier with the chart, every investment has risk, but the best way to manage investment risk is to allocate your investments into a wide variety and diversify your portfolio. In other words, don't put all your eggs in one basket. Fees are something that are very important and can impact your investment return. Research and ask questions about fees before committing to any investment. Just remember that anybody who's selling you a security investment is getting paid somehow. Make sure you know upfront how they're getting paid. And with that, I will turn it over to Pauline with some great tips on how to avoid fraud.
Thank you very, very much, Anne. I will be putting my video on. There we are. So Anne talked a lot about this already, you know, throughout the presentation, everything to kind of avoid. And it's too bad, but there is a lot of fraud out there. And so we just want to kind of give you a few tips on how to avoid it, if you can. Obviously, the one thing Anne and I have learned probably over all these years is that these fraudsters get better and better at what they do, which is why they're still out there in some shape or form. But we have some tips, and I think, as Anne mentioned also, there's actually, you know, some very common themes that have never changed in decades. Now, this study was done in 2011, so this number is probably greatly inflated with inflation, so to speak. 8 in 10 people are potentially solicited fraudulent offers. Now, with emails, it's probably 10 in 10 right now, but $50 billion per year is lost to fraud. And that is a number that is very, very real and is probably significantly larger now. So everybody, I get solicited too, everybody gets solicited. And this is because, you know, it's a little easier to do these days. Red flags, Anne has mentioned it, sounds too good to be true. It absolutely is. The one thing that we constantly hear with every single fraud is incredible gains, get and buy this right now. If you don't buy this now, you are totally going to miss out. Well, I'm sure all of you, including me, has seen something just skyrocket and think, oh, why didn't I get into that? Well, the problem is, so you hope that there's another opportunity, but unfortunately, things don't work that way. So never be pressured into buying an investment before you've had a chance to look at it. If somebody says, I'm going to let you buy this now, I'll send you the paperwork later. Absolutely not. Always get your paperwork ahead of time. And if there is no paperwork, then absolutely be very skeptical, because in order to offer an investment, they have to be properly registered, properly licensed. And there are ways that you can actually check on that. And investor.gov, which I know we have not so subliminally been talking about, is an SEC website. And if there's one place that you're going to go for very unbiased information and a resource, it's investor.gov. If you just Google, you know, mutual funds, you're going to get 100,000 things that come up. But you go into investor.gov, and what you're going to get is, you know, a very reliable, accurate source of information. So unsolicited investment offers, again, if someone comes to you and you don't know them, I'm not sure you want to, like, you know, be handing over any money. They definitely look for you through social media. If you are on social media, it'll be like a friend of a friend of a friend. And so you just need to be aware of that. You know, it's always hard to say no to something that looks great, but it's definitely the best policy. These are just more types of tactics that we have seen. Again, they sound very, very, very appealing. Sometimes they offer to do a small favor for you in return for a big favor. Some of that is, you know, we'll give you 30% more in your investment just up front, or we'll add $100 to your account, that, whatever it might be. That is absolutely, first of all, not permitted by registered brokers. They can't buy your business from you, or, you know, offer you things. Scarcity, if they say there's only a few and you got to get in now, we've talked about that. And also talking you into it just because other people have talked you into it. I have been talked into it. You know what, there's a lot of, and I don't know if I have a slide on affinity fraud. I do. So groups that are targeted, and this is not by any means, all inclusive, but this is what we see pretty much very, very, very often when it's these groups, and it's quite unfortunate. But seniors and retirees, maybe you can read there, and we call this affinity fraud. So it's a group of people that all have some kind of affinity to each other, whether they're all in the same church or they're all professional athletes or whatever. And fraudsters really enjoy having that kind of group to sort of infiltrate, because they know that these groups are pretty tight. They all are cautious, but if your next door neighbor is doing it and they're doing it and they're all part of the same church, and he or she might be part of the church who's selling it to you, then why not, right? Well, unfortunately, Ann and I co-chair the military outreach committee, and former military, current military, they tend to target military. So it's unfortunate, but it does happen. Doesn't mean you don't have to trust anybody, but if somebody comes up to you within one of your groups, it's just go back to investor.gov and check for registration. You can check registration. You can check even complaints. And this is something that should be everybody's first stop. If you are going to talk to somebody about investments, and you want to know if this person is licensed or registered, and all you need to do is go to investor.gov. Now, this is on the app. The webpage is the same. You type in their name, you click search, and if they're registered, it will come up. If they have complaints, you'll be able to see the complaints. You'll be able to see their employment history. Disclosures are complaints. And it's a very valuable tool. And Ann and I, over the years, have seen huge frauds perpetrated by someone who is not registered, and one quick search would have actually kind of blown the lid off of that way ahead of time. So it is really an excellent tool. And it also will tell you if that person's been barred or banned. You'll get this big, circle with like an X through it. I think there's something on there for the banned people, but just make sure and also if you're going to look at employment history, sometimes they're registered, but they haven't been employed by a firm in 10 years. So just kind of dig a little deeper to make sure they're still employed. They have to be registered with the firm in order to do business. You can research any investment product. I would say most of them, small private companies, maybe not on here, but then that's when you should pick up the phone and call us, because then we can sort of talk you through a little bit about like what it is exactly and how it should be registered and if it should be registered. Scams often involve unregistered companies. So it's really important that you give us a call. Search here first, and if you don't find anything and you're not sure if you're searching properly, just give us a call. This is also an excellent tool if it's a company that you've heard about, and I'm not picking on Amazon, but everyone knows it. You type in Amazon, it'll give you every filing, every 8K, which is like announcements they make, financials, annual reports. So those are also good information for investments that you might be interested in. But definitely check, are they registered, this person trying to sell it to you, and is the product registered? Verify anyone claiming to be from a government agency. I don't know if you've all gotten the IRS calls in April that you better call, call right away, or give me your, credit card, you owe money, and then, or we'll have you arrested, all of that. Always, no government agency does that, but if you're not sure because they're a little bit scary, just call the agency. Don't pay for any investments with credit cards, gift cards, or wires. No legitimate company takes investments that way at all. Don't speak to anyone you don't know, and never share any personal information. These are just good tools for literally anything, not just investments, but just for investments for sure. And never pay an upfront fee. Now, this has come up quite a bit. Sometimes too, if you bought a losing stock, you'll get somehow they get lists of these stocks and they'll come back at you. They'll come to you, some fraudsters will come to you and say, well, we know you have this worthless stock, but we're willing to buy it from you, but you have to send us money in order for us to be able to like re-register it or something to that effect. That there is no legitimate business that has ever run that way as far as investments go. So just keep that in mind. So this is something that I handle on a daily basis, and this is the tips and complaints and that comes and says referrals, which come from law enforcement and other agencies. So if you ever have a complaint or a tip, feel free to, first of all, you can just call our office and you can ask for me. But you can also go online and file something, which we like to have, generally speaking, because then we can track it better. But you know, you can always give us a call first. So I just want to stress that like every single day I get a lot of calls and emails and online complaints, and so many things that are in this presentation are just things that I see all the time. And it's just one of those things where we have these resources and we just really encourage everybody to use them. We have investor.gov, which we can't talk enough about, I guess. There's pretty much anything that you would want to know on here. There's, you know, tools and calculators and so forth. You could follow us if you wanted to. And the only thing that we send out are alerts, and I believe they're bulletins. And what we do is anytime there's something very timely out there, then we will, you know, and if it's something like crypto and we're like, oh, people might have questions about it, we'll release a bulletin. It'll just be a description, like, but if there's an alert, if we see a fraud that keeps coming up, we will send out an alert and we'll be like, beware of this scam, beware of this scam. So it's, you know, it's a good thing. It's a good place to go. And if you wanted to follow, we never share your information. You don't get anything from us other than what you sign up for. These are some of the things we have on there. We've talked about them, but these are things that you can get on there. ICOs or initial coin offerings, Ann talked about them, and those involve new Bitcoins. They're like the IPO of the Bitcoin, the crypto world. So there's definitely something to look into. And as far as ICOs go, we do actually have some regulatory authority in the company that is trying to, you know, sell shares in itself. So not necessarily the cryptocurrency, but the company itself. So, you know, that's something that we have a bulletin about. And I think we're right on time at 7:27 here. So I just want to stress that it's always good to know that you could have someone to call, and you can call our office. Generally speaking, at this time, I am the person who kind of handles a lot of this. So feel free to just ask for me, or they'll just automatically send you over to me anyway. You can send an email. There's a lot of different ways to get a hold of us. So we just encourage you to do your homework here. If you have any questions, always give us a call. And with that, I'm going to wrap it up. And thank you all very, very much for sticking this out. We threw a lot of information at you. And again, thank you very much, Patty, for having us.
It was an absolute pleasure. I want to thank both of you individually and as a team for putting together such a rock solid presentation. I'm going to make a few comments, and just give an opportunity for any questions to come in. I think one of the last things that you said, Pauline, is just, you know, that you are reachable and to contact. And I think that when we have patrons and community residents that have concerns or questions about their investments, while the library does not influence those investment choices that you have, please do consider that the library is a conduit to help you find resources to better understand the investments that you're trying to make. And we can do that with some of the educational tools that we have here at the library. And also, you know, the organizations like the SEC which may seem, yes, they're a longstanding, reputable, credible, large organization, but they are also reachable. It's not as though you can't find a way in to speak with someone who has the expertise to help walk you through the concerns that you have about an investment choice that you're looking to make. So the SEC, also there's organizations like FINRA, Financial Industry, what is the rest of it? So
Regulatory Regulatory Authority.
Regulatory Authority. There's the fraud protection from the Illinois Attorney General's office. There's the Consumer Fraud Protection Bureau, the CFPB. There's various organizations, and I know it can be overwhelming. So you are welcome to do that search yourself as patrons and community residents, or also just tap the library and say which one is appropriate. I want to run this by someone before I take this leap. And we would encourage you to do that, because while we won't make those decisions for you, we want to make sure that you're armed with the most appropriate and credible information of government agencies that exist for this very reason. And so if there's anything that you walked away with all of tonight's content, I will say that it was extremely comprehensive, very realistic, and cautionary. And you do deserve the right to give yourself the best information that's available and not be pressured to making decisions that are uncomfortable and may be considered unhealthy for you. So the good news is that tonight's presentation is recorded, that it will be available on our YouTube channel for a period of time. And I will be sending the presenters' content to each of you that has registered for tonight's program. If you're watching this on YouTube and you didn't register for the program and you want to get a copy of the materials, just contact the library, and we would be happy to provide that to your email based on request. So Anne and Pauline, outstanding. Thank you. You matched exactly what we had hoped you would bring to us tonight.
Well, thank you very much. And I mean, I wasn't trying to take away from the library resources, because I am a library junkie. I love libraries. So no, but I understand what you mean. That's fine. And no, I think that's terrific. And I'll be sending you some brochures too, so you can have those on hand. And
I think we look at it as you are one of the library's resources. You know,
We're like
all of our
extension,
resources
like a
aren't
little
just
arm.
shelves. They're also very much based on partnerships that we have,
Yeah,
and the presenters that we work with.
certainly.
And so the resources
I'm
are
impressed.
not just limited to the Dewey Decimal System.
All right. Well, thank you all. I don't see any questions, but if you have our email, you have my email, the Chicago SEC, I monitor that. So if you send us, if you have any questions you think of later on, just feel free to send me an email, and Anne and I can definitely answer that for you. So.
And if there's any topics along this line, I know that the SEC is going to be providing us with providing this library with a list of other topics for potential programs down the road. But if anyone that is viewing this has a topic in mind that you would like to see brought to this library, please do get in touch with me and or any one of my colleagues, and we will try to recruit that topic and the most fitting presenters to bring it to you. Ladies, thank you so very much, and have a great night.
Thank you.
Thank you. You too.
All for your attention.
All righty. Bye.